All right, folks, so not everything is how it seems. It could actually get worse. That's the problem. Well, if you see this chart at the lower screen here, we can notice that in 2026 is the highest renewal mortgage by data by the big banks. So, look, it will get tougher, it'll get harder. And trust me, these guys will have no mercy because nearly 1 million Canadians are at the mercy of a mortgage renewal. Now, let me get into it for a second. Uh, they're not guaranteeing a renewal. They never have. I mean, it's just that we had the period, right, of real estate, of expansion, of the unlimited funds and everything else, that the banks were overlooking many applications, aspects, as long as people were kind of okay, and they can kind of predict that things could be fine, they would give a mortgage because everything was so solid. In today's day and age, especially next year, I don't think that that will be the case because they have to protect their assets and they have to protect their own way of looking at things, and they have to make sure that you're paying for the mortgage. But even the people with the best qualifications, the ones that never missed a payment, the ones that always have been on time with an amazing record and score, they might be denied a mortgage, right? Because there's so much more involved. So, what's involved, right? Like many people are asking, so you said so many things, but what are you actually talking about? Well, let's start with the CRA, right? The Canadian Revenue Agency. So, if that particular paperwork has not been met completely, or if they are kind of not speculating, but if they're kind of wondering what's going on, they might ask for more proof and more paperwork. Second, the chance of people's income to be lower is high because nobody's doing the numbers that they used to do 5 years ago when they first applied for the mortgage, right? So banks have to verify that the income is still good and solid and same or more in order to qualify, if you know what I mean. Why? Because at the point of the first qualifications 5 years ago, as an example, criteria were different. Interest rates were different. Like just the way the relationship between the bank and the borrower was more confidence in the market. So it was different. So today everything is changing, right? So you have to understand that they will analyze you even more. And then if you're changing the bank, if you're going somewhere else, that's an additional stress, right? So they'll ask for more and more stuff in order to qualify you maybe for the same mortgage, right? So now what I want to get into is something like, monkey business paperwork. Like I understand not everybody is in that particular basket. However, they will have to analyze everyone equally and make sure that everything is flawless. So having said that, let's say there are cracks in the market. Everybody will be affected, right? And that's what we're saying. So where is the real estate market heading towards, right? Some people are claiming that we're in a recovery stage all of a sudden. Like the market will recover magically in 2026, which I think it's totally mind-blowing. Like it's impossible, not impossible, I shouldn't say impossible, like everything is possible, but I think it's highly unlikely. So let me give you three scenarios, like from a whiteboard in my head, what I believe. So I believe that we might see, let's say best case scenario, 2027, that we see a recovery, like the market flattens at 2027, and we see some kind of an economy rebound. Then 2030, that we see a rebound and we shake some things off, and maybe we could rejig Canada again, and move forward. And the third is probably a scenario that the economy will recover in 2 decades, 3 decades, maybe never, right? And the reason why I say that is, like, we're losing a lot of these big key items now in Canada, that how are we going to replace that, right? Like tariffs, like automotive economy, the way we trade globally and stuff like that, right? So yes, we do have resources in Canada, but we have to know how to use them properly. Now, getting back to this particular ingredient with the highest renewal in 2026, I mean, think about it for a second. If 1 million people are at risk, but there are 2 million people renewing, right? So almost 1 million people are at risk. So that's a big chunk, right? So some people will do many, many moves in order to avoid getting burned. But by avoiding getting burned, they're gonna get burned. So that's one. Two, we're dealing with what we're dealing with. Investors are down because the money is not coming in. If you're renting anything, you know you're not getting top dollar for it. If you bought in the peak, you're down underwater. You cannot even sell it without a significant loss. So there are all these elements. The fear in the market is not crazy fear, but people are worried. And when people start to worry, then the confidence goes away. And when the confidence goes away, if they're not confident, see you later. They're not buying. Everything is shrinking, right? There's so many other elements, like interest rates. They're, lowering the interest rates, but they're significantly higher than what they were 5 years ago, right? We can agree to that on that. And then a big, I would say, impact, right? That can, like, literally tip that domino overnight is unemployment. If people cannot generate an income, or if they cannot earn, like, it's game over, man. You take that away from people, it's finished. Like, and every single time historically, whenever you had the employment skyrocket, everything tipped. Yes, it accumulates with all these other ingredients, right? High interest rates, denying mortgages, harder this, tougher that, underwater, appraisals are coming low, people are in a dilemma, whatever, right? Confidence is gone, and then the unemployment hits, and then that's the seal, right? Almost on everything. So I think this is where we're heading. And what do you do about it? I mean, if you cannot do nothing extravagant, nothing huge, nothing big, start with small things. Start with subscriptions. Start with changing maybe your phone plan. Start maybe with getting rid of some debt that you already have. And you know what? If you cannot afford it, get rid of it. Like, you know what I mean? Like, stop getting into more debt to pay debt alone. It doesn't make sense. You're just like, the loan has to be repaid somehow, somewhere, right? So it's just when it's going to be up to you, and the longer you wait, the higher the interest rate. That's it. Very simple. So I think it's just like you have to start with small things, be focused on that, try to analyze and try putting everything on paper. Like this is probably the best suggestion. I know there's like tons of softwares out there and ChatGPT, artificial intelligence, whatever. I got it. But sit down, pen and paper, and see what you can do. That's one. Two, how can you increase your uh, revenue, or how can you increase your pay? Is there maybe an opportunity? And then the third one would be, can you actually move, right? Because that ingredient, when you move, can change a lot of things. And before you jump at me from your screen, let me explain. Some people cannot move. They're tied to Toronto, or Toronto GTA, or the big cities and towns across Canada. I got it. But some people have and they can, right? Like maybe a person, let me give you an example. He's a truck driver, right? Like whether he drives from California back to Hamilton, Niagara Falls, downtown Toronto, Orangeville, like it's more or less, it like doesn't matter. Like that particular person drives thousands of miles every day, right? But if you could somehow reset your lifestyle, and you can cut down on the monthly living cost, that can save you down the road, right? Again, there are people employed working online, right? Yes, some people have to come back. I understand that. But there are some people that don't, right? Like their job, let's say it's a graphic designer. They don't see their boss. They don't even know where they're employed, but they have to be in front of a computer using a software program, sitting at home and delivering work. So if that's the case, you know what? Maybe you could do something, right? So those are all the things that you could say. And I think like I would like to add like just a fourth element to everything. Just because people outside or inside your circle, it seems like that they're successful, they're doing good, they're this and that. Yeah, take it with a grain of salt, right? Because most of us, all of us, we get sucked into it. Like we get sucked into it because somebody else is doing it and they're successful and this and that. And then we get the ideas, oh my gosh, I'm late. I'm never going to do this. I'm never going to do that. Never say never. It's just you have to find the right path, the right way to actually do it. And you have to stick to it, right? Nothing wrong with learning. But some of these folks in your circle, like they're into that up to here. And you don't see that. They don't share that. They don't say the negative stuff about how they maneuver their life. They will only share the great stuff. They will always share the good stuff, right? And it's kind of like they're also fishing for those compliments from you in the circle, right? Who cares? Let them be. Like, do your own research, do your own stuff, be disciplined, and do what you gotta do, right? Again, books, literature, YouTube videos, all these gurus and this and that, great. Again, find yourself in it, right? Because, like I've read some of these books and they're like, oh my gosh, if you have $100 million to spend here, we can do that. Well, I don't have $100 million, so what do I do now? Like, you know what I mean? How can I invest $100 and make a million, right? So those are all the things like that. Like they're a good tool to learn and how things can be done. But depending on the scale, on your financial situation, on your current situation, on the landscape, it is completely different. And speaking to people from the United States and Canada, like a friendly debate. It's not a debate, friendly debate, and they tell me, "Oh my gosh, you could do this and you could do this and you can do that, and if you come here, we could do." I'm like, hold on a second. Like United States and Canada, completely different, Like if in United States, I would probably have 50 properties by now because it is easier, it is cheaper, you can do so much more things, especially in the run that they had and we also had, right? So it's completely different. It's a different opportunity, I find, right? I could be wrong, but I find it like that, right? So here, like if you have to pay in a suburb for a half decent townhouse 1.2 million Canadian dollars, where's the opportunity? What are we hoping for here? Like all of these prices, they have to be slashed by 80% in order for us to even have an opportunity, unfortunately. Like I feel like we redlined this engine to the end, and something's got to give. Something's got to give if you want to start from the beginning, or we're going to remain here and people are leaving Canada in masses. They're leaving, right? Not because they don't like the country or this or that. It's just the circumstances don't allow everyone to have a future, right? Like the young people, what can they hope for? I mean, it's more expensive here than I don't know, like anywhere else in the world. It seems like. Like I know there are different cities, but like we can get into details what those other cities offer too, right? So I don't know, like it's just something to think about, right? So, but if you're not doing the drastical moves, living in the countries and all of that stuff, start with the small things, subscriptions. See if you could move, if you can cut your monthly cost, right? You start from there because you can earn as much as you want, but if you're spending more than you earn, it's washing itself out. So you have to be kind of intelligent how you maneuver your monthly financial situation. So thank you for watching. I hope you got some value out of this. Please like, share, and subscribe, and I'll see you in the next one.